Aloha, everyone. Joshua Hayes at BigWaveTrading.com. I do not believe I'm going to have time this weekend to make a public YouTube video, so I'm going to go ahead and make this Friday video lesson and trade idea for members available to the public. We'll start it off with the overall market. We're pretty much in free fall mode on the QQQ. We saw some big declines today in our leading stocks. If you guys don't remember, following this session here in the long-term portfolio, I made my first sale of any stock in that long-term portfolio since I started to buy stocks back in mid 2022. Started to sell in late 2021. Believe I probably did the final sell to get myself to 50% cash some point early in 2022. Nvidia was my first sell of all the long-term positions that I've been purchasing from mid 2022 to now in that portfolio. And after today, I feel like a genius. But that being said, hey, you know, we stay below the 50. We get that tickets indicator above zero on Thinkorswim that I run. Buy stop above the 50 SMA, all in on NVIDIA. Any dip below the 200 SMA, especially if it's uptrending, all in on the reclaim of the 200 SMA. It's just that simple. But I'm using that same methodology on the QQQ and the SPY. Tickets indicator above zero, with us being below the 50. Buy stop above the 50. At any point we drop below the 200, reclaim of the 200, we get long. Back here, not below the 200, below the 200, get long. And I'll show you something else to add to that. QQQ, we never did get below the 200, but when we did back here, it was flat, not uptrending. You can still see how well it has worked, but the distribution is piling up. I think that in the short term, we've gone too far too fast, and I would expect a bounce. I think you kind of got a hint of that today. The QQQ was weak, but the SPY wasn't as weak. The DIA was green. The IWM was green. If you get rid of those tech stocks, those big cap stocks like SMCI, the NVIDIA, oops, press the wrong button like always. Can't do anything clean, obviously. Like NVIDIA, you know, today's probably not as bad as it looks on the surface, but the QQQ, SPY, they all look bad, but we'll take an internal look. Actually, we'll take a look at the internals indicators that I like to use on version 23 after I review the one long swing trade that I have. I'm starting off with this chart because I want to show everybody it's been in a long base. It's basically price is riding right above its 50 SMA. Sprouts Farmers Market, a lot of people are familiar with this stock. I am not because I eat like garbage. Don't mind. My metabolism can handle it. For now. We'll see when that changes. But for now, I don't need to eat at Sprouts Farmers Market. All I need to know is there earnings growth? Is there sales growth? How's the composite rating? Well, really, right now, composite rating is all I care about. 91 composite rating, so it's at least over 90. Any quality long setup right now has to have a composite rating over 90 for me to consider it. What I like best about this stock is as it's breaking out, the relative strength line is leading. The relative strength line looks stronger than the stock price. But the volume surge today, even though it was heavier and above average, there wasn't a lot of oomph behind it. The same with this balance of power surge today. I would prefer balance of power to look like this with that relative strength line, and I prefer the volume bar to look like this. But it is a pocket pivot point signal. It is a candle over candle above the rising 50. I'm going to try to get long with a buy stop above the high of the day. I'm going to calculate my size from this low, and I will be initially placing my final stop below this low. That way, if it triggers, fills, and fails, I won't lose the full R that I plan on risking on this trade from this low. Now, I want to take a look at the version 23 charts on the indices, SPY. I want to show you guys something. So the SPY is selling off here, right? We're going to crash. We're going to new all-time lows, right? Don't believe any of that junk. End of the world again? Again? This happens like 10 times a year. It's the end of the world. I'm pretty sure the only real end of the world is going to be when the next life-destroying asteroid hits this planet. Until that happens, it's probably not the end of the world. The only other chance that it could be the end of the world is if just everybody just starts shooting off nuclear weapons left and right. Don't see that happening anytime soon. Not worried about it. So once again, my 200 SMA, 50 SMA thesis remains. Now, on these charts, what you're looking at is a 200 EMA, 500 EMA. You could even use the 500 EMA instead of the 200 SMA. But just want to let you guys know, the 9 has crossed below the 21. I believe we reviewed that last weekend. It's bad. It's not buyable now. TTM trend momentum is low. There's no reversal in that momentum. We're triple red on my indicators. So it all looks pretty bad, right? Triple red looks bad. QQQ, TTM trends lower. Triple red looks bad, right? There's no triple red. TTM trend momentum still going lower. There's no curl, turn, slingshot in it whatsoever. DIA, we're not triple red. We've got a green here, and we've got a light red here. We've got a slingshot starting. And as you can see below, we are oversold. This is not a Wilder's RSI. This is a Telechart RSI, but I like using it better. It is oversold. It reclaims that line, that green line right here. You could get long the DIA with a stop below here. Now, what you're seeing on the DIA, if you see on the QQQ, we're oversold. You can get long once it prints that up candle like the DIA with a stop below there. SPY, same thing. We are oversold. You can now look for that TTM trend momentum indicator to curl. QQQ, IWM, we're oversold on all. Now I want to show you guys something. The last time the SPY was oversold, here, right here, we curled higher, started to go up, but then failed. Hey, got to cut your loss. That's how it works. But now notice you're below the 500 EMA. You get back above it. You're oversold. You come out of oversold with that green bar above the 500 EMA. Look at what happens in the QQQ. I mean the SPY. So this one didn't work, but this one worked. And I like using the 200 SMA and the 500 EMA more so than the 200 EMA and the 50 SMA for this oversold reclaim. But it can be done via the same way. But you get below this purple line again, you can get oversold. This is for future reference. Even when you're triple red, as long as you start slingshotting, you can get long. I believe you don't even need to wait for that slingshot. QQQ got below the 200 EMA here, was slightly oversold, did that slight oversold, but it's not at any key moving average. No surprise it fails. I'm just trying to teach you guys something to look for next time in case it happens. You get oversold, you should be looking to buy the market, not sell the market. We've sold off a lot in a short period of time. I would be looking for a bounce. Is this the bounce that leads to the ultimate uptrend? Probably not. I like to see 1, 2, 3 legs down, then look for that key moving average hold, oversold, come out of oversold, get long, especially whenever it's being confirmed via the TTM trend momentum indicator. This one was late. DIA though, you can see here, this one faked out. This one, you get to oversold, you reclaim the 500 EMA, it works. You get in the picture, guys? So that's kind of what I'm looking for. Short term in the SPY, that's the way you can play it. I won't be playing this methodology until we get to the 500 EMA or 200 SMA, but the oversold slingshot methodology works for everything. SFM, now we're going to close it out here by looking at SFM on version 23. We're above the 50 EMA. The 9 and 21 are proper. The 9's above the 21. We got the volatility stops below. The ATR volatility stops below price. But we're just in a medium squeeze. We're not coming out of it yet. We haven't gone to the gray and then starting to fire green. We are double green. We never got oversold, but at least on a weekly time frame, you can see that we're lined up. We're triple green, but once again, we don't have the TTM trend momentum going in our favor. We are extended. So the odds of this triggering, filling, and failing is high due to the overall market environment. You give me this setup in a fresh new bull market, maybe a different story. But the bottom line is we're still technically in a squeeze. We're not out of the squeeze yet. It could easily fire, fill, reverse, trigger our stops, and fail. Just keep that in mind. All right, everyone. I'll see you in the chat room on Monday.